If you're looking to raise your investment returns, it can be helpful to study how the investing pros manage their money. You can see not only their investments in publicly available filings, but also understand how they approach investing as a discipline. Their attitudes, philosophy, setbacks, and the wisdom they've learned over years or even decades of running money. However, with the right strategies and mindset, anyone can learn to invest like a pro. This essay aims to provide practical tips and actionable advice to help new investors navigate the stock market in 2024. The focus will be on adopting a long-term perspective, managing risks, learning from successful investors, identifying undervalued assets, and conducting thorough research. By following these guidelines, you can make informed decisions and build a robust investment portfolio. It's essential to start with a solid foundation and gradually build your knowledge and skills. One of the key aspects of successful investing is having a clear plan and sticking to it. Consistency and discipline are crucial in maintaining your course despite market fluctuations. Remember, investing is a marathon, not a sprint. One of the most important strategies for successful investing is adopting a long-term perspective. This means thinking like an owner rather than a trader. Instead of trying to make quick profits from short-term market movements, focus on the long-term growth potential of your investments. By holding onto your investments for a longer period, you can benefit from the power of compounding. Compounding allows your investment returns to generate their own returns, leading to exponential growth over time. A long-term perspective also reduces the impact of market fluctuations on your portfolio. Short-term market movements can be unpredictable and driven by emotions, but over the long run, the stock market has historically trended upward. By staying invested, you can avoid making impulsive decisions based on short-term market noise. Remember, time in the market is more important than timing the market. Risk management is a crucial aspect of investing that cannot be overlooked. The goal is to minimize losses and protect your capital while still aiming for growth. One effective way to manage risk is through diversification. This means spreading your investments across different asset classes, sectors, and geographic regions to reduce the impact of any single investment's poor performance. Before investing, it's essential to assess your risk tolerance, which is your ability and willingness to endure market volatility. This will help you determine the appropriate mix of investments for your portfolio. Another key strategy is to avoid putting all your eggs in one basket. By diversifying your portfolio, you can mitigate the risk of a single investment significantly affecting your overall returns. Additionally, it's important to regularly review and rebalance your portfolio to ensure it aligns with your risk tolerance and investment goals. One of the best ways to improve your investment skills is by learning from successful investors. These individuals have a wealth of knowledge and experience that can provide valuable insights into the stock market. By studying their strategies and approaches, you can gain a better understanding of what works and what doesn't. A practical way to learn from successful investors is by reading their books and articles. Many renowned investors, such as Warren Buffett and Peter Lynch, have shared their investment philosophies and strategies in their writings. These resources can offer timeless principles that are relevant even in today's market. Another method is to track the investments of successful investors through publicly available filings like Form 13F. While it's not advisable to blindly copy their investments, it can give you ideas and insights into potential opportunities. Building an investment community. Investing can often feel like a solitary endeavor, but building a community of fellow investors can provide numerous benefits. Engaging with other investors allows you to exchange ideas, share experiences, and gain different perspectives on the market. This collaborative approach can help you uncover hidden gems and validate your own investment thesis. Joining investment clubs or online forums can be a great way to connect with like-minded individuals. These platforms provide opportunities to discuss investment strategies, analyze companies, and stay updated on market trends. Networking with other investors can also lead to valuable mentorship opportunities. Experienced investors can offer guidance, share their lessons learned, and provide support as you navigate the stock market. Having a mentor can accelerate your learning curve and help you avoid common pitfalls. Identifying undervalued assets. One of the keys to successful investing is identifying undervalued assets. These are stocks or other assets that are trading below their intrinsic value, offering the potential for significant returns as they regain market favor. Finding undervalued assets requires thorough analysis and a keen eye for opportunities. Start by analyzing the financial health of companies. Look at their balance sheets, income statements and cash flow statements to assess their overall financial stability. Companies with strong fundamentals and solid growth prospects are more likely to be undervalued by the market. Next, consider the industry and market trends. Sometimes entire sectors may be undervalued due to temporary challenges or negative sentiment. Conducting thorough research. Conducting thorough research is essential before making any investment decisions. Relying solely on external opinions, even from reputable sources, can be risky. It's crucial to do your own due diligence to build confidence in your investment choices and capitalize on opportunities. Start by understanding the business model of the company you're interested in. Know how they generate revenue, their competitive landscape, and their growth prospects. This foundational knowledge will help you assess the company's potential and make informed decisions. Analyze the company's financial statements to evaluate its financial health. Look at key metrics such as revenue growth, profit margins, debt levels, and cash flow. Strong financials indicate a company's ability to weather economic downturns and sustain long-term growth. Preparation and action. Being prepared and ready to act when market opportunities arise is a crucial aspect of investing like a pro. This means having a watch list of companies you'd like to own at the right price and being ready to make swift decisions based on your research and analysis. Create a watch list of companies that meet your investment criteria. These are companies with strong fundamentals, competitive advantages, and growth potential. Determine your entry point for each stock based on your valuation analysis and risk tolerance. Monitor the market regularly to identify buying opportunities. When these opportunities arise, be prepared to act decisively and execute your investment plan. Having a well-defined investment strategy and sticking to it is essential. Staying informed. Staying informed about market trends and developments is key to making informed investment decisions. The stock market is influenced by a wide range of factors, including economic indicators, corporate earnings, and geopolitical events. Keeping up to date with these factors can help you navigate the market more effectively. Follow reputable financial news sources and subscribe to market analysis newsletters. These resources provide valuable insights and updates on market trends, economic data, and company performance. Staying informed will help you make timely and well-informed investment decisions. Participate in webinars, seminars, and conferences related to investing and finance. These events offer opportunities to learn from experts, gain new perspectives, and stay updated on the latest market trends. Engaging in continuous learning is essential for staying ahead in the stock market. Investing in the stock market like a pro requires a combination of knowledge, strategies, and discipline. By adopting a long-term perspective, managing risks effectively, learning from successful investors, building an investment community, identifying undervalued assets, conducting thorough research, and staying informed, you can improve your investment outcomes. Remember, the stock market is dynamic and ever-changing, but with the right approach, you can navigate it successfully. Set clear financial goals, develop a sound investment strategy, and stay committed to your plan. Investing is a journey that requires continuous learning and adaptation. By following the tips and strategies outlined in this essay, you can enhance your investment skills and build a robust portfolio. Stay disciplined, stay informed, and stay focused on your long-term financial goals. With patience and persistence, you can achieve success in the stock market.